Hello everyone. This is the pre-market report video for today 6th May 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened on Friday's US market. Before their market opening, US Labor Department released the US non-farm payroll data, which commonly called as jobs data. Along with that, US unemployment rate as well as average hourly earnings increase. Simply, how much hourly salary increased compared to a month ago. Three very important US jobs related macro. First, the non-farm payroll data for the April month came as 1,75,000 new jobs addition against the expectation of 2,38,000. Then also for January, February and the March data, they revised their earlier release. Here, only in March it increased marginally, in February it decreased marginally, but for January month, they revised it down by over 1 lakh jobs. So, the previous month's data was not as good as investors believed, and now for April month, new job addition is almost only 50% of jobs that added in March month. 1,75,000 new jobs in April versus 3,15,000 new jobs addition in March. So, this is less than the expectation and way less than the previous March month. For that matter, it's the least number of jobs added in the last released 6 months. I'm stressing this again and again just to emphasize the point how low or how bad the new jobs addition in US for April month. And also, along with that data, Bureau of Labor Statistics released the unemployment rate. The data came as 3.9% against expectation of 3.8%, which was also 0.1% higher compared to the previous month rate, which was 3.8%. And the average hourly earnings increase also comes as 0.1% lower compared to previous month as well as the expectation. So clearly US jobs market is not that great and it is softening. Only last week Fed chairman mentioned for the interest rate decision from now onwards, Fed will be moving to dual mandate policy. Like they will take the interest rate decision by balancing the inflation and jobs market earlier, which was just inflation focus, which all we discussed in detail in the last Thursday pre-market video. Already inflation comes as really very bad, which is the huge concern for the investors all around the world, like whether Fed will perform any rate cut this year or not kind of. Now this bad jobs data improved the sentiment that market now expects Fed to cut at least 2 rate cuts this year. And because of that on Friday, 10-year bond yield crashed to below 4.5% before it was above 4.7%. 0.2% drop in 10-year bond is huge volatility on the downside, which was positive to the market. In addition, this jobs data is completely against increasing the interest rate further, which made the US market again super duper positive. At the end of the day, Dow Jones up by 1.18%, S&P 500 up by 1.26% and Nasdaq rallied near 2%. In case of US VIX, it dropped below to 13.5. Exactly a week ago in the last Monday, US VIX was around 17. So in 1 week, it dropped near 25%. Here, one more reason for Nasdaq rally was Apple. As most of us know, they were the index heavyweight. And on Friday, Apple announced that they are going to buy back the shares worth of $110 billion US, which in turn made the Apple stock to increase over 5%. So that 5% increase also supported the Nasdaq. Regarding oil, it haven't changed much. In numbers, Brent crude oil was traded at near $83.5 US per barrel and WTI crude trading at $78.5 US per barrel. Coming to Indian areas in US market, both banks closed negative in line with Indian market, but both IT stocks closed positive. So banks negative, IT positive. It's just ADR based. Then about GIFT Nifty, on Saturday morning it closed at 22,693. Equating it with the spot market, it's showing over 100 points gap up opening. So that's all about the global market. Let's see the India specific info. First about Kotak Bank. During weekend, they released their quarterly results. Their net interest income increased 13.2% and their net profit increased 18.2%. Both top line financials were healthy and it did beat the analyst estimation. So this is the first positive. In addition, JP Morgan upgraded the Kotak Bank share to overweight from neutral. They stated their stock price got at least 34% upside potential. So this indicates the positive trade for Kotak Bank. Let's see. Second bit of negative. As per US FDA guidance and due to some manufacturing related issue, Cipla and Glenmark are recalling their some products from American market. I mean, any recall, always market don't like those. So consider this as negative for the sector. Maybe market might just ignore this today due to the US market super positive close. Third, TRAA released the March month telecom subscription data, which is usual and the data also usual. Vodafone lost 7 lakh subscribers and BSNL lost 24 lakh subscribers. Both of them were gained in Jio and Airtel. So possibly telecom stocks might be on focus. Finally, about institution, FII turned as mega net sellers. The net sold for near 2,400 crore rupees, whereas DII net bought for just 700 crore rupees. So the net institution was sell off over 1,700 crore rupees. It looks like Friday sell-off was mainly due to FII. As a summary, US market closed positive. At present, US future market also trading positive and even Gift Nifty's Saturday closing indicating a gap up opening. However, for some reason, Bank's ADR was negative. Reliance GDR closed over 1.5% negative despite at that time US market was super positive. Don't know the reason why, so not sure how market will react for that. Moving on, then as per stock open interest, MRF, Kotak Bank, HDFC Life Insurance, Coforge, L&T Tech Service and Bata India got an increase in open interest along with a negative close indicates the short build-up. On the other hand, it's Navin Fluorine, Bajaj Finance, Shree Cement, Dr. Reddy's Lab, Coal India and Hindalco got an increase in open interest with a positive price close indicating the long build-up. Regarding the things to look out, Lupin, Marico, Gujarat Gas, Indian Bank and Godrej Consumer Product are some of the major Indian companies' earnings results are scheduled released today. Regarding macro, today Japan, South Korea and UK market will be on holiday. So for major Asian market, it's only China and Hong Kong market will be open. Anyway, during our market hours at 10:30 AM, India's service payment data is due and Eurozone payment data will be released at around 1:30 PM. Then for US in the aftermarket hours, some FOMC members' speech is scheduled. These are some of the important items we need to keep an eye out today. Coming to technical, last Friday, Nifty opened 120 points gap up and hit the new all-time high 22,795. However, it wiped out all its opening gain after 2 hours and traded sharply lower for the rest of the session. Also, finally closed at around 22,480. Thus, on the daily chart, Nifty formed a long bearish candlestick pattern with small lower shadow, which engulfed previous 3 candles. So, it's bearish engulfing pattern, which is the famous bearish reversal. In addition, Nifty nearly formed the double top pattern. All indicates the sell pressure. However, confirmation of the double top pattern required follow-up selling in this week. Hence, for today, the immediate resistance is at 22,600 to 22,700 zone. On the downside, the immediate support is at 22,300. A breach below this level could accelerate the downside momentum. In case of Bank Nifty, similar to Nifty, it also opened 180 points gap up, but it has broken below and closed below 49,000 mark. So, on the daily chart, it formed the long bearish candle with upper and lower shadow. However, it still managed to defend 10-day exponential moving average 46,680. Hence, the immediate resistance is at 49,200 and a break above could trigger short covering moves towards 49,500 levels. Conversely, the immediate support lies at 48,800 to 48,700 and a breach might lead to further downside towards the 48,400 mark where the 20 daily moving average is situated. On the options front, the maximum call option open interest was at 22,800 strike, followed by 23,500, 23,000 and 22,700 strikes. With maximum call option rating at 22,800 strike, then 22,500 and 23,000. Whereas on the put side, the maximum open interest was at 22,000 strike followed by 22,500 and 21,800 with meaningful new put option rating at 22,000 strike then 21,900 and 22,100. Thus, from the options data, Nifty might face resistance at 22,700 to 22,800 levels with crucial support at 22,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.